Hello, members. Today, let's talk about stop losses. Last 3 days, market has been falling, and a lot of stocks have triggered their stop loss. Uh, this invokes certain emotions in us because nobody likes to see that they're losing money. Money comes by hard. We work very hard to earn it. And when we come to the stock market, we come to the stock market with the idea that we want to earn a lot of money. So, in that journey of earning a lot of money over a long period, when we come across patches when we are actually losing money, it hurts. I know because I have been there. I've been in the market since 8 years and I've been through what you are going right now. What I have learned over these 8 years is emotional responses are not going to take you anywhere in the market. You have to stay objective. I have read a lot of books, and all those books strongly advise in the favor of using stop losses. Okay, the system of stop loss is not something that I have created. The system of stop loss is something that very grudgingly I have come to accept, and after acceptance, I have realized that it does me much more good than it does bad. A lot of you members are new joiners, and it might be the first time that you've bought stocks, and having to book 3%, 5%, or 7% loss might be feeling very painful to you. Just think of it as an admission fee to the world of stock market. Don't take it personally. Don't hold a grudge against a particular stock. Don't get married to a stock just because you bought it. If it's showing losses, you have to exit. And this doesn't mean कि जैसे this doesn't mean that you must exit a stock as soon as it goes below your average cost. No, the stock template which I am sharing with you, it mentions a strategy. Okay, I have been studying the market. I have been studying stocks. I have done two professional courses in CMT and CFA to study stocks. I have read many additional books on top of it, and this the stock template which I share with you is the end result of all that knowledge, all that experience. Okay, so please do not take it lightly. Yes, there is a lot of room for improvement. Trust me, every 3 months I sit and I study all my trades, which I suggest to you all, and I see what I can improve. And trust me, every 3 months I come up with so many things that I improve in my own analysis style, in my own, interpretation of what I see on the charts. And I send all of that learning to you through the stock templates. So what you have to do, even when a stock is giving you a loss and you do not want to admit that there is a loss, by not using the stop loss, you're simply staying in denial. You're avoiding. You're simply not acknowledging the loss. It is not going to help you. Sometimes it does happen that the stop loss is triggered and that the stock bounces, but what I have found, that happens in less than 10% cases. But of course, in memory, it stays more clearly because that is just how the brain functions. It is a proven study which says that loss, the same amount of loss hurts human beings more than the same amount of profit. So if you gain 100 rupees, you will be less happier compared to the amount of sadness you will feel when you lose 100 rupees. Same goes for 1,000 rupees, same goes for 10,000 rupees, same goes for 10 lakh rupees. You know, all of us have earned 1 lakh rupees at some point of the time and over time period, right? How much happiness has it given you? Not much. But imagine losing 1 lakh rupees. It would make you devastated, right? So that's a human tendency. It's called loss aversion. It is scientific, it's psychological, and they're like, you cannot run away from it. You have to identify it, acknowledge it, and then you have to work on it. The only way to work through these human biases that we have is by staying objective. Objectivity will only come if you have a strategy before you enter a stock. एक बार आपने stock खरीद लिया, once you've bought the stock, you lose objectivity because your money is on the line. And when money is in the picture, we are emotional beings. We can't help ourselves. So use the strategy which I am giving you. It is based on very sophisticated study, very advanced analysis. I used to use this for institutions where I was advising portfolio managers who were sitting in UK, US, Gulf countries, managing millions and billions of dollars. I have left that and I have come here to help you through EXP Invest because I believe in what I'm doing and I believe that my knowledge has the power to help more people than just a handful of portfolio managers. So do not underestimate these levels which I'm giving you. These are based on very high level and sophisticated analysis. Now, I understand that there are certain complaints, if for want of a better word, that people have against the use of stop losses. A lot of time stocks trigger stop losses and then they bounce back, but you will see that happens just 10% of the times, like I was saying. And even in that 10% of the time, if you think that you will exit the stock when the bounce happens, trust me, it's not going to happen. Because when the bounce, even if it does come, will be 3 to 5% of the times, more than 50%. Less than 50% of the times that bounce back is going to be 3 to 5%. It will barely touch the average cost price where you would have entered the stock. And even if it does, you will not find the strength to exit the stock because your emotion will kick in and you will find yourself holding on to the stock hoping that it will achieve the target. It does not work like that. I have been through that journey. I have experienced that. And the good thing, what helped me over the 8 years to learn so much was I always kept a journal. I always maintained Excel sheets of all my trades I have undertaken over the past 8 years. It's stunning amount of data that I have, and I've used those price data. I've used all that data to always go back and analyze my best trades, my worst trades, everything. And from those thousands of trades that I've done, in equity, in derivatives, options, futures, the learning that I have received is have a stop loss before you enter the trade. Stick to that stop loss no matter what. The stock bounce back, fine. I don't care. Strategy is the god. Money is just the tool. If you're gonna keep obsessing over what money you're earning, what money you're losing, you will not be objective. So please use the stop loss that I'm mentioning. If you're in a position right now that your stop loss has already gone by and you need a reassessment, you can reach me and I will help you. But please, if you are holding a stock, it's close to stop loss, observe it, let it trigger the stop loss if it has to. Do not interfere in the process. Okay. This is the same reason why I suggest people to use Zerodha. Zerodha gives you GTT option. GTT means good till trigger. When you buy the stock, there itself you can enter the stop loss and the target. You don't have to do anything after that. You just have to make sure that the trigger happens and the execution happens. Use the facilities that are there. They're there for your own benefit. If you use them right, it will help you. It is completely okay if you're losing 7 to 10% of your capital because of stop losses if you're just starting out. Consider it a learner's fee, an entry fee to the stock market. There is nothing wrong with it. Everybody goes through it. Okay, you have to make sure that your stop losses, your losses are small. You have to allow your profits to grow. See, if you don't allow your stop losses to be executed, your capital is going to stay engaged and it's only going to get eroded because the stock which has fallen, triggered the stop loss, it will fall below because these stop losses, they are based on very high level study, very important support levels. For example, Bajaj consumers, I had given the stock idea. The stock has already fallen below the supporting trend line. It has already triggered the stop loss and it continues to fall. And basis the development of the chart after the price has been triggered, I can see that the stock will continue to fall further. So it is important that you follow the stop loss which I mentioned. Another thing would be, if you're not If you're not following the stop losses that I'm mentioning, firstly, your capital stays engaged in that stock, which is on the downtrend. Okay. After it has become a significantly big loss, it only becomes harder to exit it. All right. If you do exit it, there's a high chance that you're exiting it near the support level, where, then again the question comes up whether you should continue to hold or whether you should exit it, because, a bounce might come. That the whole process is just, it's energy draining, and it's not the purpose of why you're not in the stock market to deal with stocks that are going, lower. You're in the stock market because you want to capitalize, you want to enter stocks which are going to rally. So if a stock starts falling, divorce it, sell it. You don't need to hold it. Okay? Please follow your stop losses. That will allow you to have cap capital, liquid capital, cash in your brokerage account when a good opportunity comes. Your only focus should be keeping your losses small. Do not let stocks with losses sit in your portfolio. Even if it's painful, it's okay. Just swallow the bitter pill, book your losses, get out of it. Keep your capital liquid, keep your capital available for stocks which will have good potential to rally, and we will come across those stocks again. We have been doing it, we will do it. It's just a phase in the market. I have been seeing this trend in my members that, whenever the market is increasing, my membership number of members grows really fast because, people experience FOMO. And when the market goes into correction, people stop renewing their membership because, they're hurting from the losses. That is not how it works. You know, you have to enjoy the correctionary phases just as much as the rallying phases. You cannot pick and choose. When you have a baby, you don't abandon the baby when it starts crying, when it starts, throwing fits, right? When it starts acting out. You don't just want a baby for all the accomplishments and achievements which it's going to have in all its life. You have to stick with the strategy. You don't have to stick with the stocks, but you have to stick with the strategy. You have to stick with the game. Okay, so that's the long story short. Please follow your stop losses. I have tried to explain in details why it is important and what is the downside of not following the stop losses being mentioned. If you have any further questions, you can use the Calendly link which I share and set up an appointment for 30 minutes. And I would love to take you through more details. See, stock market is also a psychological game, so you have to win it here before you win it in the brokerage account. And one very important thing is you have to stop obsessing with money. It is not Money is just the tool of the game. It is not the goal. It is not the objective. It is not the aim. The aim is to win with strategy. I am giving you the strategy. Just execute that strategy. It takes time. It doesn't happen in one day, 1 week, 1 month. It happens over time. It's a habit. Cultivate it, execute properly, go back and study your executions, find your behavioral patterns which are not serving you well, eliminate those patterns, find patterns which are serving you well, cultivate those patterns, repeat them. That is exactly how you will find it. I am helping you with a pre-crafted strategy. Executing that strategy is your responsibility. Nobody else can do it for you.